So, friends, as I promised, I'm going to talk about crypto. Right now, in the fall of 25, and probably for the foreseeable future, for the next year or so, what can we expect? I'm telling it like it is. This is the uncomfortable truth. It's a truth that's very hard for various crypto bloggers to admit, but I tried to be honest with you and tell it like it is, first and foremost to warn you about my perspective and the risks I see. And this is going to be a pretty long podcast, just so you know. It will be split into about 3 parts. The first part is some news that I want to share with you. I'm wrapping up the challenge, $5,000 without any investment using airdrops. The second piece of news is that I'll talk about what I'm going to do with the all-weather portfolio. And third, I'll explain why things are happening this way in the market, what risks there are, and what can actually be done. Alright, so let's get started. First part. So, I'm really finishing the challenge. I had a challenge that I started a year ago. I think it was either September 3rd or 9th. I can't quite remember. The strategy was very simple. I put together an all-weather portfolio. The main idea behind this portfolio was that it should be resilient over the long term, not drop too much, but at the same time, show pretty good growth overall. And over the long run, its goal isn't to outperform Bitcoin, Ethereum, or other coins in terms of growth, but rather to strike a balance between risk and return for someone who doesn't want to take on too much risk and just wants to steadily earn a reasonable income. So, for that kind of investor, I created this portfolio, and it performed well. But the idea was also that I participate in airdrop activities. That is, places where you can get cryptocurrencies from new projects without any investment, just for simple actions. Maybe using a wallet or an exchange, or maybe, showing some activity, like giving a like or making a repost, just these really simple actions that don't take more than about 10 minutes a day. But in reality, I actually spend very little time on this. I mean, maybe 10 or 20 minutes a week, if that, and even that's probably an exaggeration. So, in reality, I was even less involved than that. And I still managed to make a decent profit. Yeah, I didn't complete the challenge all the way. I'm wrapping it up because, honestly, at this point, I just don't see any reason to keep going until the end. I'll explain why in a second. The thing is, the main idea was to earn income without investments from drops. So we do some activities, or maybe invest a minimal amount, and on average, we get about 100, 150, maybe $200 a month. These were the average returns from drops before, and it made sense for someone, especially if they had a low salary. I wanted to show by my own example that you can spend a little time, have an extra source of income, invest that money into an all-weather portfolio, and actually achieve some tangible results. Well, to build up some kind of capital, at least a minimum amount, like $5,000, money you can actually do something with, move forward, invest, and show that you can put together a portfolio this way. And that the excuse of I have nothing to invest is just an excuse, that in reality, you can make this money through these kinds of activities. Don't give up, just take simple actions and put together your own starting capital for investments. Honestly, I didn't do very well with this. So why don't I want to keep going? The thing is, the airdrop trend is dead. That's just the reality today. Back at the beginning of summer, I wrote about this. Let's take a look at when we had more or less interesting drops and when there were obviously weak drops. I gave an answer. Actually, I had 2 answers about why the drops are weak. There are 2 reasons. The first reason is high competition. So basically, let's say there's, for example, $10 million. Those $10 million are split between 50,000 people or, say, 400,000 people. You see the difference, right? That's the first point. So each person gets less. Even though the total drop amount might increase, each person still gets less. The second problem, as I mentioned, is high dominance. So, when projects launched during a period of declining or even just locally decreasing dominance, the airdrop was substantial because there was interest in coins, in new coins. Falling dominance is always good for coins, not for Bitcoin, but for other coins. In other words, there's an increased appetite for risk, and coins launch at a higher valuation. That is, they come out right away, being valued more expensively. Yeah, now, something very important has happened. As I said, you count your chickens in the fall. Well, fall has come, so let's count our chickens. This is about the upcoming airdrop for Lions. They've already released the checker. This is a project I've been working on for a long time, since 2023. I invested in it quite a bit, both with my activity and with money. So I was doing good volumes, provided a lot of liquidity to the protocols, and the amount of the drop according to the checker right now is about $16. For a top project like Line, and as I said, Line is a benchmark for me. So if Line gives out a good airdrop, it means the trend is alive. If not, then that's it. Basically, there's no point in holding on to a dead horse. You need to switch to some new trend. And that's why Line is a benchmark for me among all the airdrops. Because seriously, there are actually some really good distributions there. Those who got a good allocation received like 50,000 tokens. I have about 500 tokens, just so you know. So 50,000, that's about $1,600 at that valuation, right? That's roughly 100 times more than what I have. But I want to say that this is already an airdrop that's not available to the average person, and not even to someone who invested above average in terms of time and money. After all, my wallet is in about the top 4% of wallets. I put in a decent amount of time into this project. There was good trading volume, good liquidity, and I spent money on gas fees. I actually spent more on gas fees than I'll end up getting in tokens. They release the futures first, and then the actual token will be listed on spot. And it's the futures price that I'm using as a reference when I say it's going to be about $16. So in reality, it'll probably be even less, I think, because everyone will be selling and pushing the price down. That's it. This airdrop actually turned out to be unprofitable for me. And what's important is that this is a really strong project, with solid investment and top investors on board. And yet, this is its current valuation. That's the size of the airdrop. So, it's not some sketchy thing that just launched recently. So, it's not like, I don't know, some indie project, some indie startup, or a pet project put together by a small team. No, that's not the case at all. Here, we're talking about real money, big investments, a lot of attention, a huge ecosystem, and a very small airdrop. It's just not worth the effort, and I've come to the conclusion that this trend is dead. I don't want to fight pigeons for crumbs, so to speak, that's just not my path. I want to provide only those tools that can actually help you. And honestly, we're not here in this channel for 16 bucks. I think you'll agree with me on that. That's why, every trend has its beginning, its rise, its peak somewhere, and then its decline. For me personally, the whole airdrop story is over. Sure, there might still be a good drop with a decent payout somewhere, but I'm talking about a systematic approach here, not a lottery. And now, even the statistics are against this way of making money. That's why I'm ending the challenge. Still, during this challenge, we managed to earn $758 from scratch in a year, starting from zero and spending minimal time. So yes, some people might have been able to set aside 1,000 rubles and maybe wouldn't have even earned that much, while others could have spent just 10 minutes, not even per day, but say, per week, and still made $758. There you go. Now, let's talk about the all-weather portfolio. I invested all of this into the all-weather portfolio. In reality, the amount from the drops was less. $758 is taking into account the portfolio's growth. At the moment, the portfolio is showing an 18% increase. But it's important to understand that, in reality, the growth would have been even higher. This kind of growth comes from averaging in, because throughout the year we made additional contributions to this portfolio, specifically from the airdrop earnings I received, which I invested into the all-weather portfolio. And it turns out that if I had simply done nothing and held, invested $200 from the first drop and forgot, then the profitability would have been higher. But due to the fact that the value of assets grew, and we gained as this growth progressed, the percentage of growth turned out to be lower. But nevertheless, this is plus 18% in fact. AAA. The all-weather portfolio lagged behind Bitcoin and Ethereum in terms of growth. But as I said, that's exactly how it's supposed to be. It shouldn't deliver higher returns than Bitcoin and Ethereum. Its advantage is the balance between risk and return, and in terms of volatility, it performed very well. Its drawdowns were not just less than most altcoins, but also less than Bitcoin and Ethereum. Its drawdown was even less than that of the stock market. In other words, in April, its drawdown was smaller than that of the S&P Wink with tongue sticking out 500. And here, I believe it fulfilled its purpose and demonstrated this not only historically, as I calculated, but also in practice, in real-world conditions. Another important point is that it outperformed the S&P Wink with tongue sticking out 500 in terms of growth, meaning that in terms of volatility, it's better and more stable than the S&P Wink with tongue sticking out 500, and in terms of returns, it delivers higher profitability. So, basically, whether to invest in the S&P Wink with tongue sticking out or in the all-weather portfolio, based on the backtest I previously conducted on this model portfolio, and considering what has happened this year, I currently prefer this kind of portfolio as a portfolio for moderate investments. What am I going to do with this portfolio next? Honestly, I haven't decided yet. Maybe I'll keep managing this portfolio publicly and show what I'm buying for it, what I'm not buying, and maybe I'll make some additional investments in it. Or maybe I won't. I don't know, I'll just manage it as I go. But most likely, if I do keep managing it publicly, I'll add some extra investments, small amounts, like $50 or $100, something like that. We'll see. But in any case, it's not a challenge anymore. That's it. And the second important thing is that there's another possible path, but I haven't made a final decision yet. Maybe I won't manage it publicly, but I'll keep it going in the club and offer the same opportunity in my crypto profit analytics. There, I'll create a separate team where you can follow the portfolios by subscription. So, it might not be just one portfolio. There could be more portfolios that I'll manage myself and share there. And you'll be able to follow them. And in the channel, I'll only post the results. So you'll see what worked and what didn't, but not the actual actions. The actual actions, most likely, will be available by subscription. I haven't made a final decision yet about what I'll do with it. But in any case, the strategy itself is laid out in the PDF file. It's there. You can go to the pinned message, follow the link, and view or download the PDF for yourself. I've clearly outlined there what principles I follow and what I do. And anyone who wants to can repeat it, apply it, or even improve it for themselves. So, yeah? And now, the third part of my podcast that I'm making for you is, what's the problem with the current crypto market, and what do I plan to do about it? The thing is, as I said, the projects coming out now are weak, really weak ideas. In other words, the ideas are just made up out of thin air. They're not global, not large scale, not a revolution in the market, in finance, or in blockchain. Most of the time, they're just minor, local improvements. They invent problems out of nowhere for, well, most of these crypto startups that are coming out now. So, what happens next? As a result, there are only small amounts of investment. If before, we used to see new projects where top investors would put in $300 million, or at least $150 million, and in some cases even $1 billion, there were some really big, hefty investments. Now, it's rare for any project to get more than $50 million from investors. $30 million is already considered pretty good, and sometimes it's even less, and they can't even raise that much. And this primarily shows the attitude of venture funds toward young projects. In other words, they're not ready to invest real money right now in these new crypto projects that are coming out. So as a result, the investments are weak, and the new projects themselves are weak too. Accordingly, there isn't enough proper funding for market makers to support the price during periods of market downturns like the one we're seeing now. And we see that many new coins, even those that might seem at least somewhat promising, just crashed to zero within 6 months, dropping by 90%, 80%. Well, okay, maybe not in 6 months, but within a year. And there's nothing you can do about it, and there aren't even any decent rebounds for them either. And another important problem that needs to be acknowledged is that there are no new users coming into the crypto market. In other words, the rate of user growth is very, very slow compared to 2023, 2022, 2021, and 2020. So very, very few new people are coming in. Yes, new people do join, but it's a very, very small number. It used to be a lot more before. The thing is, newcomers are the fuel for the market, because as less experienced investors, they rush in and buy up all sorts of high-risk coins. And accordingly, when they buy them up, they push the price up. And the more experienced investors, who have identified the coins that can show this kind of growth, offload them onto the newcomers. That's how this market works. It's a lot like playing the card game Fool. So at first, we collect the trump cards, right? And then, when the game is ending, our goal is to get rid of those trump cards and leave the fool as the one who, well, basically lost. That's exactly what's happening here. We accumulate coins before the price goes up, and then we offload them to inexperienced investors who buy these coins at a higher price. That's how the market works. It's a redistribution, a mechanism for transferring wealth from the unskilled to the skilled, and from the impatient to the patient. The second part is what Warren Buffett said. The first part is my own take, from the inexperienced to the experienced. That's how this market operates. So why is it important to learn? Why is it important to understand this market if you want to make money? Because if you don't understand it, others will always make money off you. You'll just be exit liquidity. That's the harsh truth about this way of making money, and it's important to understand it. So yeah? And what's the problem here? The problem is that now, well, most of the people left in this market are those who came in 2020, 2022, 2017, or maybe 2023. These are people who've already gotten burned, who have their own experience, who understand how this market works, and who get what I'm telling you right now. In other words, there's no fuel left for growth. If we're buying high-risk coins from the top 500 on CoinMarketCap, so to speak, by market cap, who are we going to sell these coins to? Are we going to sell them to BlackRock? Are we going to sell them to Fidelity? Or are we just going to sell them to each other, to the same old-timers like us, at a price of X10? Well, personally, I'm not planning to buy, I don't know, something like Starknet at $3 or $4, just as an example. Or, say, by some wormhole at $5. Personally, I'm not going to do that either. And I think a lot of people who've been in the market since at least 2022 or 2023 understand this perfectly well and won't do it either. So growth. I'm not saying that it's impossible for these particular coins to grow, but it means that most coins, even the promising, high-risk ones, probably won't go up. Probably. There's always a chance that I'm wrong. A smart person always has doubts. So what could actually grow? And what could drive that growth? Well, we can already see that institutional adoption is happening now, and that's a huge, huge market. First of all, these are stock market investors who don't want to get into the nitty-gritty of crypto and need a convenient way to buy and invest in it. That's exactly why the ETF market is being created for them. So, these are usually older, more skeptical investors, and they don't want all that complicated stuff. They just want a simple, convenient solution. And we can see that it's working. In fact, Bitcoin is steadily growing now mainly thanks to the ETF market, and well, also thanks to institutional investors who are buying in. The same thing is happening with Ethereum. And so, coins that could potentially have an ETF approved for them really can show growth. Fundamentally, just because the market itself is growing. So yes, new investors and new liquidity won't necessarily come directly to crypto exchanges to push the price up. But when the opportunity to buy through ETFs appears, investors from the stock market will come in, and they'll be buying ETFs. And the funds, in order to maintain, well, the fair value and to keep a sufficient volume of assets in the fund, will be buying these assets on the crypto market, basically using the investors' money. So, it's kind of an indirect purchase, and that's how the price will go up. That's what can really happen. Plus, certain strong coins, strong technologies with a strong community and a strong team, they really can show growth. But again, you have to choose them carefully. So now the investor who will make money isn't the one who bought bags of high-risk altcoins and, like a lottery, is hoping that some low-cap, high-risk altcoin will suddenly skyrocket, do 100x, and he'll buy himself a Lambo. I think those days are already over. There will be such coins, but there will be very few of them. And betting on that, well, it's going to be much less common compared to the previous cycle and the one before that. And in my opinion, betting on that is unwise. And secondly, so it turns out we have only one path left if we want to see significant growth, if we want our portfolio to show substantial gains. And that's investing in strong coins, the ones that could potentially have an ETF launch for them. And those strong coins that might be interesting to old-timers, investors like me, who believe in fundamental value and are in it for the long term. These coins can also grow, not because old-timers will buy them at the top, but because old-timers will buy them when risk appetite increases. These coins will show some growth compared to others, but more than any other coins. And then the less experienced investors, though there aren't many of them, will see this and will also help drive the price up. And this growth won't be dozens of X's, but it will still be X's. But still, it's growth you can make money on. And here's an important question. How do you pick the best and strongest coins? There's an example above, and I've attached a file, when we analyze the LDO coin. In the same way, you can analyze any coin using my crypto profit analytics tool. So actually, you don't even need to run through hundreds of coins. Basically, all you need to do is open CoinMarketCap, take the top 100 coins from the list, run them through my bot, and you'll get an analysis for each coin. That way, you can get a sense of what might grow, what might not, what's stable, what's not, and pick the very best ones. You don't need, like, 50 coins or 100 coins. You don't need all of them. That time has passed. That's already history. Most likely, it won't be like that anymore, I think. In my opinion, you need to choose, and what's my strategy? Choose, like 25 to 30 coins at most. Actually, even that's a lot. Pick the strongest coins and spread out only among them. Only in what will perform better. Only in what will grow significantly and, most importantly, is stable. And of course, I don't rule out the growth of illiquid coins. Such growth is possible, 100%. And I'm not planning to completely cut my positions in high-risk coins. I'll just leave a small part of my portfolio in high-risk coins. And even among the high-risk ones, I'll pick, well, the top 100 to top 500, that range. I'll probably pick about 10 to 15 of the strongest coins from there, using exactly the same principle as with stable coins. So I'll just run them through my software, through Crypto Profit, and see which ones are good and which ones aren't so great. I'll dig deeper, do a more detailed analysis again, and pick out those coins from my portfolio, which I'll of course share in King Club, my private club. That's it. And this will be, percentage-wise, not much, maybe 10 to 15%, no more, of my portfolio. Just in case I'm wrong, or in case new investors come in, or if there's a strong FOMO in the market, because coins like these really can, under the right circumstances, give you 10, 20, or even 50 times returns. And this can really boost my portfolio. And I'm not going to completely rule out this scenario, but I'm just being realistic, and I think the chances of this scenario are pretty low. And since the chances are low, the share of such coins in my portfolio will also be small. Please give me some fire, reactions, comments. Who found these insights interesting, powerful, who resonates with all this, who agrees with me? This is my vision. It's not the ultimate truth. That's just how I see it. I'm an artist, that's how I see it, but it's based on the metrics I analyze. That is, based on both on-chain metrics and some social indicators that I see, like from the community, from the level of interest, collected from the broader market. Well, there are various metrics on social networks that you can analyze globally. How popular this topic is, how much it interests investors, and so on. So, I put all of this together and came to this conclusion. Drop some fire if you found this helpful. Have a great weekend, everyone.